All right, guys, welcome back for another video. In today's video will be an update to the Bitcoin Trading Journal series. And I just want to do an update on kind of what I'm seeing in price, start with the daily time frame and go down to the lower time frames. So right here, essentially, you see this close above the daily highs right here. So it's giving you the idea that, the daily is kind of hit a low. Again, it's a lower low, but that you're starting to see a low formation here, especially with this V-shaped recovery. Price, had after the weekend, it came down, took out Sunday's lows. Now, people have different interpretation of what weekend price action means. So these two up close candles represent Saturday and Sunday's price action. Some people have different interpretations of that. Sometimes they don't even pay attention to it. They pretend like, this doesn't happen. I'm of a little different mindset. I just think, price is price. So whatever I see in the chart, that's what I'm going to trade. I did promise I was going to talk about the different sessions, New York session in particular. So I marked off the previous New York session here. You can see there's a pretty long delay because essentially you have the weekend's price action. And you can see that the last New York session's price action was characterized by an apex formation on the hourly chart. So New York opens, runs above these highs, stops out these highs, which were formed during the London session right here. And then price slams down, takes out these lows right here. You could draw a trend line right here. So it takes out these lows. You get a price extension into that level. There's your apex formation. Then price bleeds out, comes down to essentially what is this level here. Right? You put a horizontal right there. Essentially comes down to that level, bases off that level, and runs up, runs back above for the highs during the weekend action, and now we're retracing off that the weekend rally into a 618 retracement right here. And this is another interesting part is that whenever I see a 618 retracement kind of align with a liquidity run, right? So the golden pocket of the 618 is not necessarily the 618 exactly, but it's the region between the 618 to the 0.70 is commonly referred to as a golden pocket. Whenever you see that golden pocket lining up with a run of the lows, stop run, that's probably typically going to be a pretty good area to take a trade. And here you can see it did offer a reaction. Now I guess the question is, is the reaction done? Is how much more can we expect from it? Because it did come up, fill this extension, then came down and sold off. This is actually where I took my entry based off these highs right here. And actually my greater idea is based off the higher time frame. So I have a stop right there. And so the question is now, where do I take profit? Well, the stop generally, my stop loss is pretty far away from my entry, at least initially. But then my take profit is going to be much closer. So really the level I'm looking at here is this 30375. And generally I'm just going to take, 20% profit, which on 150 lots is, let's see, we said 30375, roughly 35 lots, 30 lots. So 20% of the trade is managed there. And then the next level I'm looking at is this, well, really the primary level I'm looking at is this New York high right here from Friday's session. Price traded up there, look for liquidity there. And now price also on the right-hand side of the chart has formed an apex here. You could see that better if you went to a 15-minute chart. So if we pull this down here, yep, you can see mini distribution pattern comes down, bases off that level, breaks it. Once you get this candle body close, there's your apex formation. So this 38.27 level is going to offer a reaction generally. And now So I want to put a stop loss there. 30800. Again, just 20%. It's typically my typical order. And you notice I didn't put it exactly at the 30822 level. And that's because, with my take profits, I don't demand that it hits exactly the level. I want to be a little more liberal and forgiving in the order. So I'll round down. I'll round towards price, right? So I'm more likely to get filled. Whereas in my entries, I'll typically do the opposite. I'll typically round away from price in an effort, to make sure that just it's a different perspective, right? Being a little more conservative on the entries, rounding away from price, and then on the take profits, rounding towards price because you just want to get filled, right? The difference between adding risk and taking off risk. And then also the next level I want to look at, you have this point of origin here, which is right here. It's near the highs. Um, if sometimes I would trade that area and the high as well, but since they're so close together, I'll just trade the one. And again, the idea being that I just on a take profit, I just want to get filled, right? If it was an entry, I wouldn't take it here. I would probably take it above the highs. But yeah, ultimately, so 31250. There we go. And then, of course, if it breaks above there, well, I have 60%, it would probably come up here. Let's see, based off these levels up here. Let's see what that's on a daily. Yeah, you have that level right there. Let's see what's like on an hourly. Yeah, so you got the confluence there. So run above these highs, and then you have this brief shelf right there. So yeah, so you could put another order at 3260. But really, if so, that's 40% booked on the trade, and essentially, if if it runs all the way, if it gets above these highs, it's kind of blue sky breakout to fill this inefficiency here, and of course not blue sky breakout, but smooth sailing up until really these levels up here. But of course, I want to manage equity on my account, and that means taking profit close. And then, if price starts to move up in my favor, then I have the opportunity to drag my stop loss order up and move it closer to break even, and then also add risk on some of the minor retracements within the move. Um, yeah, and ultimately, so maybe let's see. Yeah, so ultimately, I would take profit here, but the idea is that if price runs up here, the majority of the profit's going to be booked. I'll just leave the remaining 20% on, just as a precautionary tale, just in case something crazy happens. And that's the final take profit is typically the one that I'll manually take that off once the market gives me the opportunity. All right, guys, hope you like this video. Please make sure to like the video, leave a comment below, subscribe to the channel, and I'll catch you guys in the next one.